Hey there, I'm Nicole King. I'm the broker owner of 41 Realty Group in Billings, Montana. Here again with Ian Ullman with Guaranteed Rate. And today we are talking about rate buy downs. I have been seeing a lot of ads float around from lenders, agents posting, hey, the seller is willing to do a rate buy down. That's not a term we hear a lot. What is a rate buy down?
Yeah, so there are a couple different types, but effectively what it is there's an additional upfront fee or a charge that can either be paid by the borrower or sometimes by the seller, if that works for the transaction. And what it's doing is lowering the interest rate on the loan either temporarily or permanently for the whole life of the loan. So those are the two major buckets we see as a permanent rate buy down, which is discount points effectively. You're paying an extra fee up front, and as a result, your interest rate over that life of the loan is lower for all 10, 15, 30 years.
So you're essentially like prepaying the interest that would have been charged on the higher rate.
Right. Okay. And there is a break-even point on those where long game it can actually save you money comparative to that upfront charge.
Oh, I'm sure.
A temporary rate buy down is a bit different because those are seller or lender paid. And what it's doing is, say for example, you have a note rate of a 6.5% just for an arbitrary number. On like a 2-1 buy down, what you're talking about is then the interest rate that first year is calculated 2 points lower.
Okay.
So the first year of payments is calculated at 4.5. The 1 is for the second year, 5.5.
Okay.
And then year 3 on, it's that full note rate of 6.5.
Okay.
So every lender's got a little bit different variants of those programs right now. It feels like, but generically speaking, that's the concept. And so it's still a fixed rate 30-year loan or 15 or whatever term.
Okay.
But the seller paid portion is effectively covering that gap for you for those first couple of years.
Okay.
Yeah.
All right. So rate buy downs are going to be very dependent on which lender somebody is working with. So if you are curious about a rate buy down, if you're in the process of buying a house or thinking about buying a house and you're not loving that higher interest rate, talk to your lender about a potential rate buy down, either you buying it down or maybe seeing if the seller of that property can buy it down. Your lender is going to be able to help you know exactly how that's going to work with their program and the program that you qualify for. So thanks for watching, and we'll see you in the next video.